All right, in this explainer, we're diving into something absolutely critical for any high-performing CRE leader: distribution logic and something we call the zero-base audit. Let's get right into the core challenge that you're probably feeling every single day. Does this hit close to home? Your high GCI, your gross commission income, it's become a golden cage. Why? Because every single dollar that comes in the door requires your direct manual effort. It's this huge paradox for successful leaders. You're literally trapped by the success you fought so hard to create. And while you're out there on the front lines grinding it out, there's this silent killer eating your business from the inside out. We call it institutional bloat, and what's so insidious about it, as you see here, is that it just creeps in, $99 at a time, until one day you look up and your margins have completely vanished. This isn't a revenue problem, it's a profit leakage problem. And all that bloat, it creates a huge vulnerability in your business. The result is a severe single point of failure. And what does that mean, really? It means the entire platform, your whole company, is now completely dependent on your personal production just to outrun all this hidden financial waste. You have to work harder and harder just to stay in the same place. It's a treadmill. This systemic problem actually has a name, and it has a real cost. We call it the fragility tax. It's this massive hidden cost that gets slapped on your business because you're running without a truly audited distribution strategy. This is the stuff that fuels burnout, and, this is key, it actively suppresses your firm's value because it makes the whole operation look less profitable and dangerously dependent on you. So, how do you break out of this trap? Well, it demands a fundamental shift in how you think. Take a look at this. You've got to move away from leader manual labor, that hero mentality of just personally outworking your overhead, and shift to systemic execution. This is a business that's governed by strict, unemotional distribution logic. It's the difference between being the engine and building a machine. I love this next slide because it perfectly captures the new philosophy you have to adopt. Every dollar in the firm is a soldier. If it isn't fighting for GCI, it is a deserter. It's a really clinical, objective way to look at your finances. Every single expense has to have a job, and that job is to generate a return. No exceptions. So we've defined the problem pretty clearly. Now, what's the solution? Well, we're going to operationalize this philosophy with a very specific, very powerful tool: the zero-base audit. And look, this isn't some fuzzy, abstract theory. It is a simple 3-step process. Step 1, the expense review. You pull every single recurring expense from the last 12 months. Step 2, ROI categorization. You tag every single line item. Is it an investment that's actually producing a return, or is it fat, something with low utility? And then step 3, and this is the most important part, the 4x deletion rule. If an expense hasn't produced a 4 times return on its cost, you mark it for deletion or renegotiation. No excuses. And this is what it looks like in the real world. This is the zero-base audit worksheet. This is the artifact that makes it all tangible. You list the vendor, the monthly cost, and then you have to answer that tough question: what was the actual quantifiable ROI over the last year? And based on that hard data, you make a decision: keep, cut, or renegotiate. It's simple, but it is absolutely ruthless. So here are your marching orders to put this into action. First, you access the template, that worksheet we just looked at. Second, you input your ledger, every vendor, every tool, every single monthly cost. Then, you do the real work. You calculate the historical returns. Did it generate leads? Did it save admin time? And finally, you execute. You assign a strict keep, cut, or renegotiate directive to every single line item. This is all about discipline. And what's the payoff for all this? It's huge. The constraint you're removing here is institutional bloat. By forcing every single dollar to re-justify its existence, you're not just cutting a few costs. You are actively protecting your firm's net margins and maximizing the distributions that rightfully belong to you, the owner. You're making the whole platform more efficient and way, way more valuable. Okay, now for what I think is the most important part of this whole thing. Because this isn't just a financial exercise. This is a flat-out test of your leadership. This is the architect's mandate. I want you to look at your business and answer this question honestly. It's called the absence test. If you were just gone for a full quarter, would your team, on their own, execute this audit to protect the firm's profit? Or does the platform just start bleeding cash the second you're not watching over its shoulder? And next, the autonomy check. Have you really empowered your team to be ruthless in evaluating their own tools and expenses? Or are you the only person in the entire firm who actually cares about getting a return on your investment? And that leads to the final question, the asset validation. And this is really the bottom line, isn't it? Are you building a lean, high-margin advisory platform, a real asset that another company would pay a premium to acquire? Or are you just running a high GCI hustle that's leaking wealth $99 at a time? The way forward is crystal clear. Audit the bloat, protect the profit, build the asset.